Hello, this is Brandon from Galaxy Dock Market, and it's May 19th, 2024. It's about 1:15 a.m. Eastern Time as I bring you this video. And this is part one of part four. And this is why I'm up at 1 in the morning getting you this very important analysis looking at the market preview for next week for the week ending May 24th, 2024. And so the melt up continues. And as we have talked about, we are looking for a temporary top, and we've been saying that the melt up or has the top been reached? And I said, not yet. We need to wait and see what happened with CPI. And we're going to talk about all that in this part one. So in part one, we're going to be talking about the current market direction and the macroeconomic review. By the way, we are on X.com, which used to be Twitter, at Galaxy Dock Market. Follow us. Basically, we have a lot of great intraday content and commentaries and looking at different economic indicators and events. And I like to comment on it. And it's, we're getting started. And but I think it's going to be great for you guys as we move forward. Here's the disclaimer. Read it, pause it, as always. Move forward if you agree. So, as I said, we're now on X.com, which used to be Twitter. And thank you all for beginning to follow us and check us out. There's some great content there that you're not going to get on YouTube, more on real-time scenarios, and we'll go over that a little bit. And we'll show you why it's such a great offering. For example, I'm just going to show you right over here what we've got. And so that's what we got. And so, we've been calling out a few things as it happens, and we're talking about the breaking out of the ES intraday. And these are some of the things that you wouldn't get normally from my YouTube videos. And obviously, my community members have a leg up on all these things. But we talked about the gold breaking out, and boy, did it ever break out going forward. We talked about the CPI, and we'll get into all of that. But like I said, I'm pretty active. And you'll find my commentaries worthwhile, as well as the reposts that I put on from very reputable people that I follow. Okay, but anyways, these are something that I want you to follow. It's a Galaxy Dock Market, and I would appreciate your support going in looking for that. Okay, again at x.com/Galaxy Dock Market. Okay, so let's get moving. So I did post on Friday. Actually, on May 15th, not on Friday. What am I talking about? After the CPI came out. Now, PPI was hot, and then the CPI basically seems to be diverging. We must be living in some alternate universe at this point. But it came in very, very flat, and the market celebrated this. Now, we talked about consumer demand destruction as well as the milk inflation on that last video from last week. Does anyone believe these numbers? But, we got to trade what the market thinks it wants to give you. And because arguing with the markets because of a thesis is such a bad idea. However, you have to keep this in mind because pretty soon the chickens are going to come home to roost. If you believe that the CPI year over year hasn't gone up, which is Consumer Price Index, a measure of inflation, when last week I told you that the milk inflation is about 38.6%. Okay. And, we're basically in USSA, I think, at this point. This is what the Soviet Union did before they fell apart. But enough on that commentary. Okay. But this triggered that melt up, slow grind higher. And this is why I said we got to wait until the CPI. And, I continue to think that we got a little bit higher to go before the turn in the market, but we are very, very close. So the other thing is, rigged much, people? Here it is. Jean-Pierre, confident BLS will resolve data leak. And they were sorry about the CPI data early release. And that's what melted this trigger up higher, right? Earlier when the market started moving on the monthly options expiration last week. Okay, so it appears that the CPI data was released inadvertently. Okay, early. This is the part, right? Okay, did that benefit the retail investors? No. It benefited basically the powers that be. And if you haven't noticed how retail is abused and what I call dumb money, we're not dumb, but I mean, that's what they call us, the retail investors. And the insanity and the stupidity can be evidenced on the pump and dump scheme on GME and AMC. We'll talk about that later on later parts. So, the front running and the melt up, that explains everything, right? And I said, why is this even legal? And why are people putting up with it? Because we just do. We are taught to obey, and that's what we do. But as market participants, you can't ask these kind of things or seek justice or the validity of it. We have to trade what the market is giving you. And if you believe that this is a managed market, which it is, okay, then you have to basically play the game that these um, people are setting up for us. And I'm not going to use any type of words and things like that of that nature, but you know that the game is stacked against you. So let's talk about the news. Let's see what they're doing instead of what they are saying. What is it telling us right now? Fierce fighting gets closer to the U.S. built Gaza pier. Okay, why is that important? As initial aid rolls off, right? Because this is the lifeline of the refugees, the Hamas, and all of those people as they're fighting, right? So how's this going to end? Well, it's not. They're setting the stages, right? Listen to what they're saying. Fierce fighting getting closer to U.S. built Gaza pier. Okay, it is setting a scenario for a black swan type of event. Whether it comes or not, you have to be on guard about it. Listen to what they do, not what they say. Okay, what are they going to do about this? Well, the other thing is that it's not just in the US, right? The global debt to GDP ratio are skyrocketing, right? Here's the funny part, right? Fed chair has expressed concern. Oh, really? So the issue right now is that the Fed Powell is concerned about the global debt to GDP ratio. Talk about a tea calling the kettle black, right? This is dystopian, guys. This is insanity at its best. And it's just basically like, a murderer expressing concern, right, to a serial killer. I mean, it's just, it is what it is, right? So just keep paying attention to this global debt to GDP ratio because even though the markets are skyrocketing and melting higher, everybody's talking about now what ES 6000, uh, SPY 550, 600. Okay, those are usually the times when this market melt up is going to end. Now, I'm not saying that we're going down. I have called the turn in the market in this current rally. And I have also maintained that it's not time yet, right? But we're getting very close. I have also said we are running out of time for my 2020 market analog for the sell off, right? We did sell off, but not to the magnitude that we were looking at, okay? So I have talked about all of those, but pay attention to this, okay? Global debt to GDP ratios are skyrocketing and Fed Powell is concerned. How about taking care of our own country's problems? And the reason why these are happening is none other than fiat money system, right? Fiat money system or fractional reserve banking. I'm not going to write that out. It's too long, okay? If you print money, you just print money to oblivion and you basically keep printing money and pretend that everything is fine. Eventually, this is what's going to happen, global debt to GDP ratio. So I'm going to basically kind of continue to do that. And I think it's funny because I'm going to show you a little post. I reposted. I rarely do this, but this is from Elon Musk. And he said he posted this. I think he just took a screenshot of it. Okay. Monopolies. This is funny. Monopolies instructions for bankers, right? And he said this is what our Fed is doing, right? Some players think the bank is bankrupt if it runs out of money. The bank never goes bankrupt, right? Okay. And it basically tells you, to create new money on slips of ordinary paper and pretend that there is enough money. And I was rolling laughing when I saw this last week. And Elon Musk basically clearly said, this is what our Fed does. Exactly. Okay? Just think about that. So the other thing is, the media is talking about out of control inflation now, right? It takes about $177,000 for a family of four to live comfortably in the United States. Now, the median income right now is still like 45,000, right? Not right? I believe so. Okay. So what is happening to middle or to lower middle America? People or the consumer demand destruction that I'm going to be talking about is alive and well. Inflation is killing people. Okay. They are not able to buy consumer discretionary goods. Okay. It is eroding our purchasing power. And yet the Fed is what? They're concerned about the global debt to GDP ratio, and are they clueless or are they doing this on purpose? And I'm beginning to feel that they are doing this on purpose, folks. Okay, now this is something you need to pay attention. China unveils a housing market bailout. You know that there is a commercial and residential market crisis in China right now, much bigger than what we experienced in 2007 to 2009. Okay, with potential to spread into and maybe causing the black swan event, and not even maybe, I know it's going to, right? But everybody has their head in the sand and everything is fine, right? Fed is concerned about growing debt to GDP ratio in the world, right? Okay? And those are kind of the idiocy that leads to something like this. And why it's still not enough? Because you print enough money on paper and you spread that inflation out to the rest of the world, and China's no better. They're doing the same thing. Okay? So this right here, Evergrande contagion is coming, folks. Okay? Just be on the lookout. I'm not saying it's tomorrow. I'm not saying it's going to be like, I don't know, you know, a month from now. But that contagion is coming, and when it comes, and when it finally decides to come, it's going to come fast and furious. And guess what they're going to say? We couldn't have seen that coming. Everything was stable, right? Subprime is largely contained. Famous words of Bernanke in 2008, right? Don't trust these people. So here's the consumer demand destruction continues, right? This is what I'm talking about. So I wanted to talk about this. A shout out to Macro Edge. I think this is one of the best charts I've ever seen. But they talked about, follow them on Twitter, and I have it on my Twitter site, since 2011, highest auto delinquencies ever, since 2011. Okay, so this green line is auto delinquency. Okay, here's 2011 right here, right? So since 2011, it was kind of coming down. Folks, auto loan, especially the subprime auto loan, is much bigger than it was in 2007 or 8 or even in 2011. And the percent of balances that are basically being defaulted on or basically delinquent, 30 plus day, that basically is danger zone. Okay, Kenny Loggins, right? Top Gun, danger zone, right? He do that music. I don't have that capability. Otherwise, I would have fed it into here. All right. But the credit card, we talked about this. I've been talking about this since October, right? September. Okay. And then what do we have? We got the mortgage delinquencies are coming up. All of these are coming home to roost, right? But what's the odd one out? Okay, can you spot the odd one out? It's the student loans. Why is that? Because they have artificially uh, forgiven debts. Okay, forgiven debt, and that is a highly inflationary event. So all these people that have worked hard and paid off their student loans are subsidizing these people that basically have taken out these loans for useless degrees, and we're bailing them out. Not only that, okay, now because under Biden's new student loan payback regiment, if you don't make enough, I mean, a lot of people are paying zero, right? They're paying zero every month. And so that keeps the delinquencies at bay. If they did not do that, this one would be way up here. Okay. I would say more than that. 16% of the balance would be delinquent. But that's only going to get worse. Okay. If Trump gets into the office, I don't know. I don't care about either side. I just think that there are more of a selection that occurs in this country than there are elections. And but that's another topic for another day. However, all right, the student loan is going to be a catalyst. This basically auto loans and credit card debt is the highest right now. All right, pay attention to this. This is the consumer demand destruction. Pay attention, folks. And not everything is peachy. Okay, don't believe this engineered Fed rescue market that continues to melt a little bit higher. Okay, until they pull the rug out. And that rug pull is coming sooner than you think. It's just not the right time right now. Fed says that the job growth is good and that economy is stable, and they're confident of bringing the Fed rate down to 2.5%. Let's look at this. I mean, if you guys know trend line, is that a downtrend or an uptrend on the job cuts, right? This is a job cut that is on. Here's a higher, right? Higher highs. Okay, we're just dipping. We're probably going to go much higher. Okay, is this a healthy job market? Last I looked, everybody's laying people off, right? Last I looked, people can't afford to buy milk or food. Okay, if they do, they are going to be putting it on their credit cards, right? So, and I've been saying that about that, right? I think that credit cards, most of the U.S. consumers are tapped out. They are using credit cards, and I've been saying this on last week's video, that they are using credit cards to buy essential things like food. Okay, and MarketWatch just posted this on Twitter. Okay, that's just why you should follow me on Twitter. Shoppers are taking on credit card debt to buy groceries. That's canary in the coal mine. No crap, folks. I've been talking about this type of exact scenario. The consumer demand destruction is alive and well. And I don't care if the stock market continues to go higher, it's going to continually affect those stock sectors that are dependent on disposable income. So, my consumer demand destruction, hashtag, I even made a hashtag, okay, is alive and well. Exactly what we talked about in our video last week, right? So, is CPI really, not 3.4, but it's 3.6, right? Year over year. Is it really? Come on, guys. All right, do you really believe this? Okay? I mean, does anyone believe this? So this isn't going to end well, right? It's going to keep pumping and pumping. They're going to keep printing money over and over again. And I think this is the way it's designed. I think that eventually U.S. will lose the reserve currency status, if not already. The BRICS have already been denominating petrol trade in their own currencies among each other. And because America right now, we're toothless. Okay, we can't enforce that. In the past, we used to go bomb them, but now we can't do that anymore, right? So what is our directional indicator telling us at this point? Okay, this is our McClellan Summation Index, and it is fully directional, and I've been telling you that. And in fact, we call the bottom and that bounce that is currently undergoing right now. This blue line is the 50-day moving average. I believe we're targeting up to here, and that'll probably get there in the next couple of days, okay? The RSI has broken out from this trend line. However, we are still divergent from here. Okay, our MACD finally on the histogram has flattened. MACD histogram is flattening. Pay attention. Possible push higher to the 900 level. Okay, where's that 900 level? Where my X is? On the MSI. But MSI doesn't lie. This is one of our best directional indicator, and if you know how to use it, then you will know how to find the tops and bottoms and the continuations in the market to determine whether you should buy the dips or sell the rips. Okay? This is what we talk about in our community. Now, put to call ratio, guys. Pay attention to this one. We're at 0.54. This is usually contrarian at these levels. Can it come down to the bottom range of the channel? Sure it can. Okay. In fact, I would welcome that. But there is this uptrend line that I think it's going to bounce here. And if we break out above here, I think this has legs going higher. But RSI is nearing support, and maybe it keeps going down. Who knows? But we'll trade what the market gives us. But you have to be on the lookout. Right now, this market has gone up nonstop without a pullback, really. Okay, it attempted a little bit of a pullback on Thursday, but then on Friday it faked everybody out and it just finished flat. Okay, it is chopping. It is losing momentum, folks. So be aware of what's going on. What is our fear and greed indicator saying? Oh my gosh, we're back to the greed level, folks. So we're getting very, very close, but not yet. Okay, just pay attention to this. Pay attention to the McClellan Summation Index. Pay attention to the news cycle and trade opportunistically. In fact, last week we had a lot of great earnings plays that paid on the downside, right? Even though the market went higher. We also took advantage of the gold. I called it out in Twitter. We talked about the gold breaking out about a week ago. Okay. And those of you who bought some gold calls on the futures made out nicely. Okay. Congratulations if you did that. Okay. But these are the type of technical analysis that is necessary. You can't basically rely on, oh, I'm going to be perma bull or perma bear, because you will get eaten up alive. And even if you're agnostic, it is a difficult market to trade. This is contrarian, folks. I was waiting for this greed level. Let's see if it gets a little bit higher on Monday. Okay. If not, we'll see. By the way, pay attention to gold, folks. It's telling you something. And we will be talking about gold on part 3. Now, also, for those of you, I'm breaking this up into part 4 because you know my videos have been becoming increasingly long. And those of you who watch it, maybe a couple times, definitely will get rewarded. I mean, everything I put out last week has come true, and a lot of my earnings plays that we talked about has come to fruition. So watch until the end of part 4 for summary and watch list. I know that's what you want, right? What am I looking at? Do your own due diligence, but I'm going to help you out a little bit. So here's the situation right now. We are still directional, and the melt up was expected, and it is continuing, but we are getting very close. Okay, we're getting very close. Are we going to just fall apart if we have a black swan event? But at the same time, you got to trade what the market gives you. You can't trade the headlines. You can't trade because the CPI is rigged. It most likely is. Okay, with milk being at what, 35, 36% inflation, and the Fed is telling you, not Fed, but the BLS is telling you it's not, and yet BLS helps to corroborate this Market Watch article about how consumers are using credit cards to buy groceries because of what? Lack of wage growth and inflation. That's called stagflation, folks. So divergences are setting in on MSI, but it's early. Fear and greed index is at 65, so complacency is setting in. But consumer demand destruction is real, and it won't end well shortly. And if you trade and understand which sectors and which type of stocks are going to continually be under pressure, then you'll know what I'm talking about. Okay? Now, again, we're at Galaxy Doc Market on x.com. Okay, formerly Twitter. Follow us, okay? It'll be worthwhile. And we have something special forming for the x.com as a social media. For those of you that are complaining that my memberships are too expensive, but I think they're worth it. But like us, share us, and above all, comment on my YouTube video. By the way, guys, I'm overwhelmed. I know I just started this channel from my previous channel, and we're back up to about 926 subscribers. I mean, I'm just blown away by this. Okay, so thank you so much for your support, and continue to subscribe and let people know. Share us, okay? And if you want to know more about our group and want to find out about doing work with me at Galaxy Doc Market, inquire to Coach Brandon at Proton Mail and schedule a consultation. Okay, let's see if we can work together. Otherwise, thank you so much again for your overwhelming support. I'm going to continue to do this, and I'm motivated. I'm, again, overwhelmed by continued support. Thank you so much. Let's do this. Let's grab some alpha.